Hello and welcome. I'm Shereen, Bhan, and you're watching Young Turks, India's longest-running show on startups and entrepreneurship. It has been a momentous year for General Atlantic, which is celebrating 2 decades of investing in India. Well, we know what that feels like, as Young Turks also completed 20 years of chronicling India's startup story this year. General Atlantic has been a big believer in the digital disruption story since the early 2000s. The growth equity investor has deployed more than $4 billion in Indian enterprises across key sectors like climate, consumer internet, financial services, healthcare and technology. In the next decade, GA wants to double down on India, which is its top target market. $2 billion have been set aside for investments in Indian and Southeast Asian innovative businesses over the next 2 years. In fact, its recent $100 million bet on Amagi turned the SaaS media tech startup into a unicorn. This alone can tell us about the size and type of investments that could come in from General Atlantic. Having said that, growth stag rounds like these have been hard to come by this year. India saw a record $77 billion of private equity and venture capital investments in 2021, but 2022 has been sobering to say the least. Globally, investors have switched to the wait-and-watch mode, weighed down by tech routes, fewer exits, inflation woes, recession concerns, higher cost of capital and geopolitical uncertainty. Against this backdrop, what's the playbook at GA and what's driving its decision to go big on India as we turn the page to 2023? To answer those questions, joining me on the show, Sandeep Naik, Managing Director and Head of India and Southeast Asia at General Atlantic, and Shantanu Rastogi, Managing Director and Head of India at GA. Gentlemen, thanks very much for joining me here on this very special episode of Young Turks. And let me start by saying congratulations. 20 years, 2 decades, it's an impressive milestone, Sandeep. Let me ask you for what the biggest hits have been along this journey.
Shereen, thanks for having us, and congratulations to you on 20 years of Young Turks. It's been a phenomenal program. It's been one that has truly motivated entrepreneurs in India, and a lot of the credit should go to you for really making it happen. So congratulations to you as well. As we think about the last 2 decades, we feel very fortunate to have been a part of the story of building some of the most iconic companies in India. It started off with our first deal in 2002, when we invested behind Patni Computers. And that was the beginning of real investments going into IT services in the country, which was followed by Genpact. We then did Jubilant, we did Hexaware, we did IBS, Cyient, and we did a bunch of deals which were basically anchored around the theme of outsourcing in India and how you can benefit from the labor arbitrage that India had to provide. So in that first decade of investments, we did a lot of deals focused on BPO and IT outsourcing, while also doing deals in the financial sector, like our bet on NSE. We did IndusInd Bank around that time as well. And that was really the flavor of what we did in the first year. So we invested about $1 billion in 10 deals in the first decade of investing in India. In the second decade, we really expanded our aperture given the domestic consumption story in India and the fact that there was a lot happening on the ground in India where we could build companies that could benefit India. And in the second decade, we deployed over $3 billion in companies within financial services sectors like IFL Wealth, BillDesk, KFintech, PNB Housing, recent investment in ACO. In healthcare, if you think about companies like KIMS Hospitals, ASG Eye Care, Rubicon. In consumer, with companies like Anita Dongre, DMart, Capital Foods, as well as Reliance Retail. And then in consumer tech, which includes Jio, Baiju, Unacademy, as well as No Broker. And so we really expanded the domestic consumption story and backed companies where we tripled the investment in the second decade. And that same pace should continue, Shereen, in our third decade, as GA looks at backing great entrepreneurs, building companies for the next India.
Well, thanks very much for recapping to us some of the milestones achieved over the last 2 decades. And it's interesting to see how the complexion of the companies invested in has changed between the first decade to the second decade, much more the listed play in the first decade versus the unlisted play, or a mix of both in the second decade. So Shantanu, that's what I want to discuss with you. What does decade 3 hold now as far as GA's appetite to bet on India? And in terms of diversification and in terms of looking at themes that you haven't touched on so far. Is there anything on the anvil that's new? Where do you expect to double down further at this point in time?
Sure, Shereen. Thanks for having us. And I think Decade 3 is going to be very exciting. India being one of the only major economies in the world, which has the potential to grow at 7 to 8% for the next decade. Young population, English speaking, one of the best, one of the countries producing over more than a couple of million tech software developers, which are coding for the whole world. So the outlook is fantastic for India. What we really want to do is use our enterprise IT services theme and build on it to back entrepreneurs who are now building software products for the world. So software out of India is a huge theme for us going forward. We want to double down on healthcare. KIMS and recently ASG Eye Care, Rubicon have been fantastic investments for us. And this is a big theme where we believe shift to private healthcare, affordable healthcare is a multi-decadal theme, and we'll continue to do more in that area. And lastly, I would say the underlying theme is really digitization. With Geo coming in, low-cost data, close to 500 million young Indians having low-cost internet access would create fantastic omni as well as direct e-commerce marketplace opportunities that we are very excited about.
Healthcare and, of course, the SaaS story, which we've seen you bet on through companies like Amagi, and, of course, the larger digitization trend that you spoke of, Shantanu. But, Sandeep, I want to come back to you now, and just to build this out a little bit further. Through the course of the pandemic, the India SaaS story was what everybody was talking about. Companies making in India but for the world seems to have become the theme that investors want to bet big on. What do you see as the key challenges there, especially in the current context where we are seeing both in terms of valuations but also in terms of market dynamics changing? Do you believe that that story may see some challenges in the near term, while in the long term we agree that it is poised for future growth? And on the whole digitization aspect again, through the pandemic, the bets that were made is that this is the new normal. There's never going to be a revert back to what we saw pre-pandemic. But that assumption hasn't necessarily played through as expected. So on both counts, what are you factoring in? What caveats are you factoring in?
I'll split the question, Shereen, because there are two different answers. One is on enterprise SaaS, what's going on, and then on the consumption story, consumer tech in India. On enterprise SaaS, we believe this is a decade-long opportunity, similar to what we saw in the early 2000s when we embarked on the IT outsourcing story. Indian IT outsourcing companies created almost $1 trillion of market cap in the last 2 decades. We believe that enterprise SaaS coming out of India will create another $1 trillion of market cap in the coming decade. So they will do it within half the time that it took us backing IT services companies in the last 2 decades. So that's a real trend, because 24% of the software engineers globally are sitting in India. India graduates about 3 to 4 million engineers every year. And so truly, to provide the enterprise SaaS offering to the rest of the world, these companies will have to get created here in India. In terms of the valuation environment, yes, the valuation environment has completely changed, and that will also change for the enterprise SaaS companies. And hence, there'll be some great companies that are going after very large addressable markets that will be investable at what seems like very fair valuation. And we are seeing a string of those companies that we are currently in discussions with that we will go ahead and make a play. If inflation continues to be high and if the global economy continues to suffer for the next 18 to 24 months, there will be some slowdown in terms of enterprise SaaS offerings that will get absorbed by these companies. So the sales life cycle might be a little longer, and you might see some of the revenues slowing down, but the next decade-long story is very much intact. And as GA, you'll see us betting on a lot of enterprise SaaS companies, Indian founders, Indian companies, building out and serving the rest of the world. In terms of the consumption story in India and consumer tech in India, I think we did see an acceleration in terms of adoption during COVID. And once people have now moved out of their houses, you'll see a little bit of that come off. But the awareness and the adoption is real. The stickiness is definitely there. And as a result, this has opened up a whole slew of opportunities, whether it be in fintech, whether it be in health tech, whether it be in ed tech. where people have gotten used to using technology to make their products and services that are available to them. And as a result of that, the entrepreneurs that are building companies on top of the India stack that's been created, these will be decacorns that will get created in this decade. And as General Atlantic, we hope to be a part of many of those stories.
Well, we look forward to many decacorns being born here in India, Sandeep. We look forward to that. But Shantanu, you were talking about the bets that you want to make in the third decade, healthcare, enterprise SaaS, digitization. And I want to address the edtech story because you've been believers in the edtech story. You've invested in companies like Byju's, etc. What we're seeing through this phase at this point in time is not just a big correction in terms of valuation, but we're also seeing these companies having to pivot their business models. There are questions on monetization ability and monetization capability and whether this model is eventually going to work in the long term. Has the edtech space seen a reality check? Is it going through a reality check at this point in time? What do you believe is likely to change within this?
That's a great point to discuss, Shereen. When a cost of capital increases and liquidity dries up, a lot of sectors have to undergo a reality check. And I think edtech is no different. When there is plenty of capital available, a lot of business models may have to optimize themselves for a slightly different capital environment. So I believe the real signal remains very strong for the next 2 decades to create millions of great global workers out of India. And a lot of the companies we have backed thus far and many more that we intend backing in the years to come would continue to provide great value proposition to these learners who want to start, coding as well as providing services and building products for the rest of the world. So we remain very, very positive on the long-term outlook for this sector and continue to want to double down in this sector in the years to come.
CNBC-TV18, celebrating 23 years of business leadership.
Sandeep, I want to come back and talk about the investment trajectory. You said $1 billion across 10 deals in the first decade, $3 billion across a whole bunch of deals in the second decade. What can we expect in the third decade? And I'll ask you this in the context of our last conversation. And you had said that you hope to deploy between $1 billion to $1.5 billion in India, but that hasn't been the case. So you're sitting on plenty of dry powder at this point in time.
Yes, last time we spoke was last Jan, and I said that we are open for business because that was a time when the global liquidity was really getting pulled back. Great companies that had a real value proposition but didn't have the cash would need to raise capital. That has been delayed by 6 months, I would say, because some of those companies that had cash didn't need to come to the market right away, but those are all in conversations right now as we speak, because there are some phenomenal companies being built out of India. And these companies will need money. And I think we are always there. We are open for business. We have a lot of dry powder right now. If you look at the trend, Shereen, we invested about $1 billion in 10 deals in the first decade. We invested about 3 times that in 20 incremental deals in the subsequent decade. And I have no question that we will keep that pace. So I would be surprised if we don't put to work at least $7 to $8 billion in the coming decade across 20 to 30 companies. That will be the most iconic companies that will come out of India. And that's really looking back. I think what is success to us is if we can make these entrepreneurs successful in helping them achieve their vision of building great companies that serve the needs of India. I think we as General Atlantic would have been very successful in the coming decade as well.
Well, so that's almost double of the money that you invested and deployed in the second decade. That's the target that you're working with, $7 to $8 billion over the next decade across 20 to 30 companies. Well, speaking of companies and investments and news reports, Shantanu, lots of buzz around companies like PhonePe, etc. Who are you talking to at this point in time?
As I told you in the beginning, Shereen, we are very, very focused on the India digital stack. We want to back companies which are enabling millions of Indians access low-cost digital services and in a very affordable manner. And this is a huge theme for us. So we are very keen to keep investing behind this theme. And, for example, the UPI ecosystem, the upcoming OCEN ecosystem, the ONDC ecosystem, these will be huge areas of focus for us for investments in the years to come. So we want to back the policy agenda, the agenda of the government, and making low-cost software, low-cost India stack available to millions of Indians.
Okay. Sandeep, while we're talking about India, I also want to talk to you about what's happening in China. And we spoke about this in our last conversation as well. And since then, the regulatory challenges, the regulatory headwinds, China looking much more insular at this point in time. And the expectation or the assumption is that that's good news for countries like India. How are you now seeing this play out with the way that China has decided to move as far as tech regulation is concerned, and the way that India is moving with its startups?
Shereen, if you look back, and there was a very celebrated report of Goldman Sachs which talked about the BRICS economies and talking about the next 20 to 30 years of growth and the economies that are going to lead it. If you look at those BRICS economies, you have Brazil, you have Russia, which is almost uninvestable at this point. You have India, which continues to be a shining light. China, there's a pause in terms of what the policy framework, the regulatory framework there is going to be. And South Africa, which again is having its own problems. India is truly the bright star, right? And as a result, it's not lost on anyone. And as I keep telling people that the India story is very evident, which is why you're seeing so much interest in India today. My fear is that we don't get again flush with so much liquidity that entrepreneurs lose their way because of the over-optimism and over-enthusiasm about India. We have been long, strong-term bulls on India. And in India, the only thing that matters is execution. And execution by putting your head down. And that's what we are really betting on.
You gave the BRICS example. And yes, Russia at this point in time is uninvestable on account of the geopolitical situation with the war in Ukraine. But you said it's a pause on China. So it's not as if investors are not willing to place bets on China any further or any longer. It's just a longer funding winter, perhaps?
No, Shireen, China is such a large economy, you cannot ignore China. And China will have a very strong domestic economy. The Chinese government is going to focus on making sure that the GDP grows north of 5 to 6%. So we continue to be bullish on China. But we just have to wait and see how the regulatory and the policy framework plays out. But it's not lost in anyone that if you look ahead, China will be one of the largest economy. And as global private equity investors, we will have a very strong dominant play in China. So that's definitely how GA thinks about our investments in China going forward.
Shantanu, speaking about regulatory headwinds, the government in the last budget had announced setting up this committee that would look into any friction and pain points that the PVC community is facing in India. That committee has now been set up. There have been meetings, and the expectation is that whatever the recommendations are will perhaps be carried forward in this year's budget, which is around February. What's the chief issue that requires intervention at this point in time, that requires attention of the government at this point in time? If I were to ask you to list down for us the top 3 things that you believe the government needs to address, what would those be from a PEVC point of view?
I believe, having invested in many regulated businesses and many more that we are looking at, one of the areas that I believe the government is already investing behind, and I would encourage them to continue to do further, is to have regulators which are continuing to take a lot of suggestions from investors, from entrepreneurs, from companies, and have an open sort of listening attitude to making changes, being agile in creating the right framework for companies to grow. I would say that's the number one area of focus. The second area that the government has alluded to, which is judicial reforms or reforms in being ability to enforce contracts in a timely manner. I think what has been great is to see, all kind of arbitration awards from Singapore being enforced in a timely way in India. If there is a way in which that process can be accelerated and brought to India, I would say that will give a lot of global investors investing large amounts of capital a lot more confidence into investing in India. The third, I would say, is just policy continuity on a variety of these, in the variety of these sectors and industries, which so far has been the case. And we actually see the implementation of GST, the bankruptcy code, and a bunch of other reforms playing out very positively. So we are very encouraged by the way how responsive the government has been and has actually heard us as well as many other multinational companies and global investors, and in creating the right environment for investment.
You know, speaking of the right environment, Sandeep, let me ask you whether we are going to see a long pause as far as exits are concerned. You know, in the current climate, what's the expectation on that front? I mean, how much further do you push out exits at this point?
You know, Shereen, if you look at the Indian markets, our stock market is almost at an all-time high. And that's because not only is foreign money flowing into the market, India is on everyone's map right now. Everyone wants to increase their allocation to India. And so contrary to what you said, I think exits are very much open in the Indian market. And you've seen us as General Atlantic continuously having exits in the market. As you've seen one of our exits in IFL Wealth, which we sold to another competing firm. We took our company public in KIMS, and that was a liquidity event for us as well. And there are a couple more that are in the pipeline right now. So the Indian market is very much open for exits, unlike what we are seeing globally, where the markets seem to be a bit shut, either in terms of IPOs or in terms of other secondaries that are happening. So in the Indian market, I believe that from a GA standpoint, the India office is going to be a large contributor to liquidity in the coming 12 months, and the Indian market is very much open for exits. So I don't think we should see a pause or a pushback of exits from the Indian market.
You're right in pointing out that the Indian markets have seen a one-way up move even through a very tumultuous global environment at this point in time. But let's talk about the new listing specifically of the new age tech companies that we saw, and there has been significant value as well as wealth erosion. Do you believe that we're perhaps at the bottom of that cycle? Do you think the worst is past?
I think that what was happening last year a little bit was just euphoria and momentum investing that was happening, which is why you saw us stay out of the market in 2021, which is when a lot of these companies went public, or the early part of 2022. I think what you've seen in terms of correction is the right correction. I think companies are valued fairly at this point. So it's tough to say as a market if you have called the low of the market. I think it's individual company based valuations, and I think there are some companies that may still see the downside, whereas some company may be trading optimally at this point. But as General Atlantic, you know, we are very focused on unit economics. We are very focused on profitability. We are focused on profitability at scale with decent growth. We don't need to see hyper growth in these companies. And as long as you sustainably grow profitably, I think you're in business for a very long time in India if you have a strong company and a strong founder. And those are the companies that we as GA like to back. And hopefully those are the companies that we will bring to the market, into the IPO market in the coming 12 to 18 months.
Within your own experience with your current portfolio companies, is there, of course, everyone's now talking about cutting down on costs, bringing in more efficiency, doing the right things and not chasing growth, but chasing demand. You know, are you starting to see visible changes even within your own portfolio companies on being able to get to the path of profitability? And what's the timeline that you're looking? What's the average timeline that you're looking at?
Absolutely, Shereen. I think across our portfolio, I mean, the quality of entrepreneurs we have backed, you know, read their opportunities very quickly and move with a lot of agility. We have the highest quality entrepreneurs backing our portfolio companies and running our portfolio companies. They have understood that allocating capital optimally, managing their expenses optimally, reducing areas where long-term potential of the business model may not be viable, you know, cutting them off from the business model. These are all areas that all entrepreneurs are very focused on right now. I expect a lot of them to turn profitable in the next year, and many more to start generating, you know, free cash flows the year after. The question is, while doing these corrections, I think our guidance is not to overcut and, you know, remove areas which may actually have great long-term potential, or lose critical talent in the business. So how do we move towards optimal capital allocation, measured growth, profitable and free cash flow driven growth is the mantra a lot of entrepreneurs have already attuned themselves to, and we are very positive about next year and the year after in terms of profitability as well as free cash flows.
Well, Sandeep, Shantanu, it's been an absolute pleasure. Thanks very much for joining us on this special edition of Young Turks. Here's wishing you and the team at GA the very best of luck. And we do hope that that this next decade is going to be as exciting as the previous two. And we look forward to catching up with you again. Thanks very much for your time. Well, that's it then on this edition of Young Turks. For now, from all of us here on the team, goodbye. Many thanks for watching.